Welcome, and here we're looking at the S&P 500 on the 4-hour chart. We've got this particular move up through here. Now, we may have a low in here, but I think we need to allow this rally to play out a little bit. The 38% retracement level, if it's a small wave 4, will be at 1760, 1762 there. So it's still got a bit more to play to the upside here, and this will be the same for most markets as well. The reason I think this is a little wave 4 here is because of the bonds market. I don't normally sort of show the bonds on the video here. I just keep an eye on it sort of on the outside. But I've just been tracking this particular wave count up through here. The degrees of structure are not correct, but the counting's fine. But the main point here is from this low here, we're looking at 1, 2, and then 1, 2, 3, 4, and 5 for the third, back for the fourth, and that's why the US indices are rallying in their fourth. So this can have another fifth wave up here before it has its ABC correction here. So that's what the bonds are telling me. Coming back to the S&P 500 though, I'll go into the 2-hour chart here to drill in a little bit here. So it's kind of looking, we know we had this triangle pattern here as a wave 4. That's where triangles take place. But look at this as 1, 2, 3, 4, and 5 down to here. So look, we'd really need this to push up through here and find support on 1772 here to confirm that that's in play. I know that's a long way away. Perhaps even support on the 1760 could do the trick for day traders. But the reason coming in here for wave 4, E or 4 here, coming down to wave 5, we were looking down for 1, back for 2, down for 3, back for 4, and down for 5. So let me just, I think I may have made a bit of an error here. No, I haven't, that's fine. The 38.2 retracement level comes in at, a bit lower actually, 1756. I don't know where I got this from, my error is here. So it's pretty much there, but I can see that it's going to make a new high here all the same. So we just drill in here a little bit further. So just going over this wave count here was basically down for 1, back for 2, 3, 4, and 5 down to here. But as I said, I may be wrong, and it can just continue up from that point there. Just picking lows can be a bit tricky. But I can see here on the 5-minute chart here, on the bullish side here, we can quite easily see we've got 3 waves here, a nice A, B, and C here. So that high will be taken out through there. So that's probably why I'm thinking, I don't know why I was thinking of 1762. But look, first of all, it's bullish above the 1750 according to using the trading levels to actually place trades, and seeing this little correction, reading a market using Elliott, this particular structure here will see us up at above this high here, up into this area through here. So we can have the rally actually starting as such. So this would be this B wave moving in from here as such, and we'll be looking for that in an A and a B and a C, 3 waves to the upside. That can also pull back 61.8% of the move down, so we'd be looking for a move here. So this is the 50-60% area, plus also too, this is the supply area in through here as well, through here. So what we could say is long above the 1750. That's what you'd be looking for there, but we can't confirm that we're going further up and how far we're going just yet. And that's the same with the DJ as well. I was thinking here though that even though we're moving up through here, this is the important number here, the 15,500. The 5 is the second strongest number in the markets, and having it at 15,500 that will be where the all the orders are going to be sitting there. So that will be a resistance, and you need it as support. On the downside here, if you got 15,420 as a retested resistance from next time round, then you know you're going to be going lower and taking out new lows here. So the short would be 15,420 as a retested resistance. Otherwise, we're going to move up here. But even when we move up here to the 15,500 here, it's going to be, we can see the selling's coming in here already. So there'll be some sort of move to here, a move back, some type of corrective pattern and trying to gain support on here. And if it does gain support here, then you need to take out one of these highs here to trade long from that point. All right, that's sort of classic trading levels pattern. The DAX is also the same as well. It does appear that we've got from this low here, we've got a little 5-wave structure up. So it is sort of positive for the short term at least. In terms of trading, the closest largest number is the 50, the midpoint, the 91.50. So you'd need that as support there. This appears to be corrective here, so look for support there. Once again, short would be under the 9100 here. So look, we're in a corrective move. We're in a move up, and we just got to work out if it's a corrective rally or it's a larger impulse wave moving to the upside. And that's why we need to work with the closest, largest numbers as retested support or resistance. And if you can bring in the volume to those retests to confirm the price action, then it makes it a safer trade as well. Now, if you don't understand how to read volume, there are a few videos on the site for that. The FTSE, weekly chart here, just from the bigger picture here, is that this move up through here has got overlapping wave structures, okay? So the lows here have been taking out these highs here. So it gives us a corrective pattern here. So I feel that we're still in this larger wave 4 here. It could be down for 1 and going back for 2 and down for 3 and 4, 5 in for a C wave, because the C wave is always in 5 waves. So look, short term, you need to work with the levels and the internal wave count. So we can't particularly go long here until we've got the medium level here, 6,500 as support. It's as simple as that, okay? But any move up, I'm saying, even if it went quite high up here, is still likely to be a rally as well because of this whole corrective pattern here. Not only this here, but this move down through here is in 5 waves. So that means that we'll be getting, after a corrective move, we'll be getting another 5 waves. Because it's moved up really high, it does tell us that the market is strong. So normally the 5 waves we'll be looking for down would take out a wave, this low here, but it won't be like this. It will be it's a flat correction, an A, B, and C regular flat correction. So it can still come down to this particular trend line, but the FTSE is also a bit different from the DAX and the US markets as well. That said, the little move up here on the 30-minute chart here does appear to be impulsive up through here, so we should see further highs push up through here, but be very careful about going long into this block of supply here. So the risk that you're taking for the reward, it doesn't really add up that much, but certainly if you're going long, then the 64.50, the midpoint here, and the stop would need to be under that at 64.46. Okay, the just having a look at this is the stock here, the STOXX 50, the top 50 stocks, European stocks. So you can see here, just as a point here, it's still in the throes of working with major trading level 3 here. It hasn't got it as support or resistance yet. It's just doing its corrective process across here. So it's not ready to go anywhere just yet. And being a wave 4 correction, we can expect something a bit more complicated than just one move down. Okay, the ASX 200 here. Okay, so for this particular market through here, we're looking at from wave 4 here. It's triangle pattern through here, looking for wave 5 to move down. We can also have the low in here now as well. It never extended down or broke lower through here. To confirm this low in place here, we would need to see the 5,100 become the support here, and a little bit more so to the top of group 1, which would be 10, 20, and 30. So 51.30 as a retested supported area here would really help that. Well, I know it's a long way off, but that would be the support on that tells us that it's leaving the 51. That's the norm here. But of course, once we've got some sort of support here, we could move in from that point there. But you've got to be sort of careful, because realistically, this market has been moving down to the 5,000, and it does act like a strong number. It's a bit like a finishing line, so to speak. So we know that group 1, in this case 100, 200 and 300, we see a fair bit of bouncing around here. But look, this fifth wave can be finished now, so we can see a move up through here. And I've started to see that in some of the other markets as well, especially the grains, for instance, and the Australian dollar pushing up as well. So and the Australian dollar's always been a good leader of what's sort of happening as well. So it's got, anyway, we won't go into that, but just sort of drilling in here a little bit. Okay, it's moved along a little bit. I could see that this morning this here was corrective as well. We'll be pushing up through here, so we can obviously expect with the ASX opening as such today, looking for support on the 5,100 as well. So for the ASX CFD, we're looking for support here as well. We can see that we will make new highs here. It will push up through here, and 5110 is the sort of first resistance area up here. Well, 5 is, but 1 is stronger than 5. So either way, yeah. So it should just try and finding itself support here. So if I had to try and count this from the low here, it'd be 1, 2, 3, 4, and 5 up here. So we'll be looking for some sort of move up through here like this. So yeah, trade long. All right. Thanks for listening.